Alright, I'm Forest God and I welcome you all to my YouTube channel. If you know you are new here, please kindly click on the subscribe button. In today's video, I'm going to analyze the market for you guys for this week. I think I've been getting a lot of notifications in my DM saying I should show you guys how to analyze the market for this week. So this is how I analyze the market personally for the whole week, and this is how I catch up my trades for the week. So in this video I want to be showing you guys how to analyze some pairs for this week. So first of all, we are starting with the USDJPY. Before we continue to do anything on the US pairs, the first thing we need to do is to check our DXY. The first thing we need to do is to check our DXY to see what is the market doing. How strong is the dollar or how weak is the dollar? So the first thing we'll do is to check on our DXY to see. So DXY, let's see what the DXY is presenting. So on the monthly time frame, as you can see, DXY is currently reacting on this order block we are seeing here. This is an order block DXY is reacting to, which means the DXY is bullish, which means the dollar is very strong, as you can see after this break of structure to the upside. This is on the monthly time frame, which means the DXY is very strong. And as you can see currently here, the market is trying its best to move to the upside. Which means the dollar is becoming stronger and stronger each and every day. So what we are going to do now is to move into our USDJPY pair to check on the monthly time frame what is the market giving us. And as you can all see on the monthly time frame, this market is giving us a strong bullish move to the upside. But currently what you can see is price is giving us a bearish move to the downside. This is just a correctional move, some would say a retracement. In the lower time frame, this is a retracement. I see that. So we will move straight into the lower time frame, like the weekly, the daily, and the 4-hour time frame, to see what the market is presenting for us, and we are going to follow the trend the market is giving us. But the overall trend on the monthly time frame is a bullish move, as you can all see. So move straight. Oh, sorry, this is XAUSD. This is XAUSD, that's gold. So let's move down to the USDJPY. This is USDJPY. Sorry guys. So this is USDJPY, and as you can all see, the market is moving to the upside on the monthly time frame. This is the monthly time frame. The market keeps moving up after market reacted to this fair value gap present here. You see that there's a fair value gap present here. After price give us this break of structure to the upside. There's a fair value gap here which market came to fill. So the market came to tap in this fair value gap, and it is now moving back to the upside after market tap into this fair value gap. So the market keep moving to the upside, trying so hard to target this external high on the monthly time frame. So it means we are still bullish. And all we need to be doing is to be looking for buying opportunities in the lower time frame. So coming to the weekly time frame, we realize that markets keep on breaking structures to the upside. Look at what market just did here. Market just broke this structure here to the upside. Markets closed last week. Markets closed above this candle here. Let me zoom it all for you to see it clearly. You can see that markets closed above the high, which means we are now broken another high to the upside. So all we got to be doing here is to be looking for buying opportunities. No matter what the market is presenting to us, we should be looking for buying opportunities. And as you can see on the weekly time frame, we have this fair value gap here where I think the market will be targeting before moving to the upside. And there's another fair value gap here. there's no any fair value gap. We have just only one fair value gap, which is here, and I think this is where the market will be targeting or retracing back into. Market will be retracing back into to give us continuation to the upside. Note the market is in an uptrend, so all you have to be doing is be looking for buying opportunities. Any sell opportunities you get here is a counter trade against the market, and you need to be very, very careful. So slowing down into the daily time frame, this is where we'll now mark our structures very well. So take note, this is the fair value gap we have on the what, on the daily and weekly on the weekly time frame. This is the fair value gap we had, so we have to be very, very careful. When markets comes here, you need strong confirmation before you take your trade. You need to wait for a very valid change of character before you take your trade, but I will take that off for now. I will take this fair value gap off for now and mark my structures on the daily time frame very, very, very carefully. This is where we will be taking our trades for this week. Now that the overall trend is now bullish, we should be looking for buying opportunities. So I will take time here to mark my buying my break of structures to the upside on the daily time frame very, very carefully. And as you can see, this is a break of structure, and as you can see, we have another break of structure to the upside here, and as you can see, we still have another break of structure, the last break of structure to the upside before markets closed last week. And we still have, oh, there's another one here too, another break of structure to the upside here too. So these are the current break of structures we have to the upside. So these are the places we will be looking for opportunities to take our trades for this week. So this is first break of structure on the daily time frame, second break of structure on the daily time frame, third break of structure on the daily time frame, and we have the fourth break of structure on the daily time frame. So where should we expect our buys? All we need to do is to focus on the current break of structure. Before we now identify the current break of structure, we'll move straight into the 4-hour time frame. So the 4-hour time frame will now give us a clear view of the market. So this is the 4-hour break of structure. As you can see, this is the 4-hour break of structure. We have this here. So this is the break of structure we will be looking at, and I'm seeing this break of structure to be a very strong break of structure because you can see this structure swept liquidity here. It swept this liquidity here before giving us that break of structure, which makes this break of structure to be very, 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 very strong. But as you can see here, we have no valid order block on the 4-hour time frame. You can check here, no valid order block on the 4-hour time frame. So all we need to do is to move down into the lower time frame to keep seeing if we get a valid order block where we are going to wait for our setup for this week. So as you can see on the 3-hour time frame too, we have no valid order block, so move to the 2-hour time frame. So coming into the 2-hour time frame, what do you see? You can see that market is presenting to us no valid order block still. For me. We have this and this, but still I'm not seeing any one of them to be valid yet. So I moved into my 1-hour time frame. So my 1-hour time frame should give me something beautiful here. And a 1-hour time frame, we are having this order block here. 1-hour time frame, we're having this order block here, which is very, very, very good. After this sweep of liquidity, market broke these internal structures. and give us that order block, that continuation order block with a fair value gap. This is a fair value gap there. You can see this fair value gap here. See this fair value gap here. This fair value gap, and you can see liquidity resting just above that order block. Liquidity here. We have liquidity here, and we have a lot of liquidities. Okay, let me tell you this thing. You know, in market structure shift, we have this when markets break structure to the upside this way, and you see choppy movements like this, to the upside, choppy break of structures to the upside. Remember, markets will come to take all this choppy break of structures to the downside as liquidity before the overall movement to the upside. So that is what we are seeing on USDJPY on a 1 hour time frame. You can see that market has created this choppy break of structures to the upside before market breaking above this, which means market is going to what automatically come back to take all this as liquidity before tapping into this order block and giving us a buy to the upside to break this high, to give us another break of structure to the upside. So you guys need to be very careful when you are analyzing your market. You need to know fake break of structures and valid break of structures. So to me, I am going to wait. I'm going to wait here this week for USDJPY. But take note, market is reactive and not predictive. Markets can get to this other block here too, and start moving to the upside. That's why I always tell you guys that when you are taking your trades, you need to get a strong confirmation before you take a trade. So when market let's say market moves from here to here, you wait for a strong change of character in the 15-minute time frame or the 5-minute time frame. Then you now do what? You now take your trade from there. Let's say you see something like this, then you now target your trade from here to the upside. But if it doesn't happen so, and market moves from here to here, you wait for market to what? Change character. You wait for market to change character. After it sweeps liquidity, it changes character. Then you now target 50% of your Fibonacci level here. Then you take your trade to the upside. So I think this is my trade setup for USDJPY. Yes, if you know you have your own setup, please kindly drop it in the comment section and let's discuss it together. Thank you for joining. Stay tuned for the next video next time. I'm Forex God.